What's going on, guys? My name is D. Anthony with evolutiontraders.com. In this video, I want to give you guys a very simple trading strategy, especially for those of you guys who trade prop firms, futures. You can use this essentially in any market on any instrument, but I want to really focus on futures, and I want to really focus on the NASDAQ 100, which is ticker symbol NQ. The reason why I want to focus on the NASDAQ is because the range on the NASDAQ is extremely volatile. You can catch 10, 15, 20, 30 points, in a matter of minutes. Also disclaimer with that, you can also lose 10, 20, 30 points in a matter of minutes as well. But I believe that if you manage your risk properly, you're not, trading like an absolute lunatic where you're putting on way too much size for your account. This strategy will make you profitable over the next 30 days. Now, that strategy that I'm going to be talking about, I've focused on many of times here on YouTube, but I want to kind of elaborate with a little bit of drawing tools and kind of show you guys the one beautiful setup that would have essentially put you into a trade this morning. Today is the 15th of February, and it would have paid you upwards of 20, 30 points on this move. Now, what we are looking at here is the 5-minute time frame. I like to focus on the 5-minute time frame. It will work on the 1, it will work on the 2, the 3, the 15, the 60. It doesn't really matter which time frame you're looking at. The only difference that you need to kind of understand when you're looking at different time frames, especially the smaller time frames and the larger time frames, is that the amount of risk is going to be different. So for example, if the average true range in a 5-minute candle on a 5-minute time frame is 20, 25 points, you would have to assume and imagine that if you did lose a trade, you could be losing upwards of 20 to 25 points. So from there, that's when you kind of, plan out how many contracts you want to trade, right? How much risk are you okay with losing? And again, one very simple way that I kind of do this is, let's say, for example, I'm going to take a trade of 25 points. So if I lose that one trade at 25 points, I'm going to lose $50 per one micro contract that I'm trading. So if I'm okay with losing 50, I ask myself the same question. Am I okay with losing 100? I can trade 2. Am I okay with losing 150, 200, so forth and so forth? And that's going to kind of put you in a particular situation where you can assess and manage your risk accordingly. For the sake of this video, let's say that we're okay with losing, $150, $200 on the trade. Okay. What I want to highlight here is anytime momentum shifts and we get a close from underneath to back over, or from over to underneath the 20 period moving average, which is a 20 SMA, that's the indicator of what we're looking for. Now, I drew these arrows on here to kind of show you every time that we close over and under. Again, it's no fancy indicator. You're not going to be able to find it if you're not on Thinkorswim. Again, I just put these arrows here just to kind of show you guys for this video, where we're closing over the 20 SMA. Now, I want you to kind of notice here in the pre-market, I like to start my day, meaning I really like to start looking at charts after 5:30 a.m. Pacific Standard Time. Okay. So again, depending on where you're located and where you're, what time zone you're in, correlate that to the time zones that I'm referencing. So for me, my day will really start after 5:30 a.m. Now, the New York session is going to open at 6:30 a.m. So I've got that kind of 1 hour in the pre-market that I'm kind of looking at data. And if I get something that sets up or confirms, I wouldn't be opposed to taking it. Okay. I don't need to wait for the New York session to open. Again, this is futures. The market's open 23 hours a day. So with that being said, you can see here in the pre-market off 5:30, we get this initial spike that kind of takes out the overnight session highs. We put in a high here, we put in a low. However, there's no confirmation, okay, on the next following candles, meaning what you're looking for is a close over the 20 SMA, and you're looking for a following candle to confirm the highs. Once the following candles, right, and typically it's got to be, the next candle, the one after that, the one after that. I like to see it happen, relatively quickly within 5, 10, 15, 20 minutes. I'm not going to tell myself, 2 hours later, hey, we closed over the 20 SMA 2 hours ago and look to take that trade. Again, it's got to happen pretty quickly, right? Because again, this strategy, we're looking to make money quickly. We're not looking to kind of sit in trades, for hours and hours and hours on end. So the way we're going to manage our risk is if we look at this particular setup here, there's no confirmation, so there's no trade. So automatically you're going to X this trade out. And what would you be looking for? A play that sets up to the downside, right? So if we don't get no confirmation to the long side, we have to be looking for that rejection spot at the overnight session highs, and you get a candle that closes back below the 20 SMA. And we get this time for you guys exactly, so you can look at this on your chart. It's 5:45 in the morning Pacific Standard Time. Now, this range is 35 points. So again, the question needs to be asked. If you're trading one contract, you're going to lose upwards of around $70 on this one particular play. Are you okay with losing $150? Sure. Okay, now we can start to trade. Now we can put on some risk. If I'm okay with giving up 35 points on this reason why candle, I'm going to be losing $150, give or take, minus slippage and spread and commissions and all this, that, and the other, for every 2 contracts that I trade. So if I'm looking to give up 35 points and make $150, I would be looking to make at least $150, right? Again, nothing's picture perfect. Sometimes will you take, profits off the table a little early because the market's starting to stall? Of course. Sometimes will you have to cut a trade because it's a loser? Of course. Sometimes are you going to hold a trade longer than that because it's, the momentum is so powerful? Of course. But for the sake of the video and for the sake of keeping things simple, if I'm going to risk 35 points, I at least want to try to target at least 30 to 35 points in my favor. So that would be close to a 1-to-1 risk to reward ratio here on this particular trade. Now, again, what are we looking for? We're looking for a next following candle to confirm the low price of the candle that closes below the 20 SMA. You can see here we put in this new price below the 20 SMA. It kind of chops around a little bit and kind of back tests the 20 SMA and then really starts to break down. So once it starts to break down from this area here, this is where you want to get short. Now, again, this trade takes 5, 10, 15, 20 minutes, 20 to 25 minutes before it develops and puts you into the trade. However, once you take the trade, you're already okay with giving up that 35 points because, again, remember, before we even enter a trade, we're already okay with the assumed risk that we're putting on. Okay, if that doesn't make sense to you, scroll back 15 seconds, re-listen to that again. Before we get into the trade, we are already okay with the assumed risk if this trade doesn't go in our favor. Now, once this trade starts to go in our favor and puts us in, yes, you might get into a little bit of drawdown here for 10 to 15 minutes. It's not going to be that much because, again, remember, you were already okay with losing 35 points. So if you go into drawdown 5, 10, 15 points, there's no real reason to get shaken out or get excited or get anxious, right? You've already accepted the fact that the trade might lose and it might win. Again, this is a 50-50 game here with our strategy and our risk management giving us a little bit of a slight edge, okay? So what's the difference between closing your eyes, clicking buy or sell? You don't really have any risk management edge there. When you have a strategy and you have, technicals or something that you're looking at that's going to kind of manage your risk, from that point, that's what creates that little bit of an edge, okay? So our edge is that we're going to risk no more than 35 points and that the momentum has shifted from over the 20 SMA to below the 20 SMA, and we have price action that's starting to confirm the lows. Once you get in here, you can see that the drop would have paid that 1-to-1. In fact, it goes down from a price of your entry should have been somewhere around the lows of this low wick here, 17,882. The lowest price that we tested here was 17,827. So you can see this is actually a 50-point move roundabout. So if you were looking for 35 points, you would have gotten at least 35 points within the first 30 minutes of the market open. Okay, so again, if you're not happy because you only made $150 off of 35-point move because you only had 2 micro contracts, that does not mean that you need to turn around and start looking for the next trade. You want to make 500, you want to make 1,000, this, that, and the other. What you need to do is be content with the move that you took worked and reward yourself for doing something good. What that means is you want to reward good trading practices and not just fall off the rails and say, I made $150. If I take another trade, I'm going to make 300 or 500 or 600. I'm a type of person where if I can catch 1 or 2 trades, especially early in the morning, within the first 2 hours, I like to shut it down. And the reason why I like to shut it down is not because I don't want to make more money, but it's because I want to protect the money that has come in. Again, not every day is going to be a winning day. Not every trade is going to start off a winner. So you're going to have to manage your emotions and your P&L accordingly. But with this simple strategy here, it will allow you to start passing prop firm evaluations. It will allow you within 30 days to start to see that you can be profitable. Again, if you stick to the plan, you stick to the rules, you don't over leverage yourself, give it 30 days. You will see that you're going to become profitable. If you guys want to trade with myself and the team each and every single day and get access to the courses, mentorship, all of those links are down in the description box below, and I'll catch you guys on the next video.